This is the Cashflow Digest. My name is Matt Faircloth, and me and the DeRosa team are here for you guys on a weekly basis with this podcast, YouTube video, and broadcast recording. This is also live on our Facebook group, DeRosa Insiders. In whatever medium you're watching, please take a minute and like this content, leave a comment, and leave it a review. We really appreciate you guys doing that. And we're going to be talking about all things real estate and all things cash flow because our company is dedicated to transforming lives through real estate, and cash flow can do that. We're going to be talking about things that are affecting the real estate industry, news in the real estate investing world. And we're also going to be bringing on guests that are crushing it in the cash flow sector of real estate investing. If you guys want to join and watch the show live, please go to Facebook and look up DeRosa Insiders and join that Facebook group where we record this show every Friday at noon Eastern. Hope to see you guys there. What's going on, everybody? It's Matt Faircloth here. Welcome to the Cashflow Digest. My name is Matt. My company is called the DeRosa Group. If you guys are not watching live, you can next week because we go live every Friday at noon Eastern on the DeRosa Insiders channel, which is on Facebook. Look on Facebook under the search bar, DeRosa Insiders, and you'll find the DeRosa Insiders community with thousands of members of people that are passionate about real estate investing, cash flow, living a better life, making a better life for other people, and transforming lives through real estate as we do here at the DeRosa Group. And that is the DeRosa Insiders community. And that is a capital F free community here on Facebook that you guys can join. Talking about getting creative. Guess what? Real estate investing is always creative. You don't find good deals, you make good deals. Get out there and find your own real estate opportunities, build your own partnerships. That's how you're going to achieve true wealth in real estate. What I want to talk to you guys about, I've talked about it before, but I want to dig a little bit deeper today into this enormous snowball headed at the world right now with regards to all the foreclosures that are coming and the commercial debt that's coming due. The 1.5 trillion was the last number that I heard coming due in commercial debt. Some people believe that New York City occupancy rate, like that 15% of office occupants in New York plan to renew their leases as their leases come up. 15%. That means 85% plan on either reducing or eliminating their lease occupancy rates for the office buildings that they occupy. That's New York City. That's not nationwide, right? What does that do? What are the opportunities that we as real estate investors have to take advantage of the changing commercial real estate economy? Now, as I talked about in prior episodes, this money is primarily retail, primarily office. It's some multifamily, right? It's some industrial, but more than 50 to 60% of it is office and retail. Because the question is, if there is a problem, a change, a shift in the economy, how do real estate investors like us take advantage of those kinds of things? So I'm going to give you guys 3 quick tips on how real estate investors can take advantage of the complete change that's happening in commercial real estate. You guys ready? Here we go. Tip number 1. Real estate investors can become great at optimizing office space. That optimization of office space could be turning that office into residential because America still needs a ton of residential housing. Office spaces are in phenomenal locations, right? They're typically right in the middle of downtown with a coffee shop down the street, and maybe a public parking deck next door. Those things could all become assets for people that want to live there, not people that are currently working there. You could become great at optimizing those office spaces into housing. That's going to take some construction mindset, construction methodology. Not all office spaces are built with the same mechanism and bones that residential housing is, but it's still sticks and bricks. It's still a physical plant that could get rechanged and rejiggered and changed around to become an apartment building, right? So if you think outside the box, how can real estate investors take advantage of that? Number 2, perhaps in rehabbing those office spaces or repositioning those office spaces, maybe what I think, this is just what Matt thinks, is that companies are not going to need 10, 20, 30,000 square foot of office space. They're still going to need space, right? Very few companies are allowing their employees to work from home all the time. Most companies have gone to a hybrid schedule where Monday and Friday you work from home and you pretend to work. Tuesday, Wednesday, Thursday, you work into a physical office, right? What if there was a smaller footprint that large companies like, Comcast, Verizon, the big ones you've heard of, What if there was a smaller footprint those companies could occupy and they could rotate their employees through? Maybe Johnny uses the desk one day and Susie uses the desk another day, and maybe they occupy the same physical space, but they're not in the office at the same time. Just Johnny gets one login, Susie gets another login, and maybe Johnny doesn't personalize his desk anymore. Maybe just desks become kind of like an Uber, right? You go and it's your desk today, but it's Susie's desk the next day. I'll blow your mind with another wacky Matt Faircloth idea. What if Johnny works for one company and Susie that uses the desk the next day works for a different company? What if Verizon has the office building on Monday and then Tuesday Comcast has that office building and then Thursday Wells Fargo has that office building? What if companies can lease office space by the day? Not like Regis. I'm talking about they get 10, 20, 30,000 square foot and all their employees are required to work in the office on Tuesday, and they use the conference rooms and all the community assets, and they've got a big open floor plan worth of desks, and you just shut the desk down, log out of your computer, and a cleaning crew comes and wipes it down for you, and that's provided by the landlord. And the next day, another employee comes in and works on that desk. I think, guys, that's what's possible if you think outside the box in the world of office space. So office is an enormous thing that could get optimized if real estate investors are willing to think outside the box. Quick question here that came in on Facebook. I'll show it right here. I am scared of office and retail. I get it. I'm hoping what is happening in office and retail will scare multifamily owners into selling at a discount, searching for weak operators value add who think a collapse is coming. That's perhaps true, but I don't think that change in office and retail is going to scare a multifamily investor into selling. What I think will happen more in the multifamily world is multifamily owners that made bad decisions, that bought properties the wrong way, that set things up the wrong way, or may end up either losing or having to sell their assets at a discount at a force from their bank, or this is something that just may end up coming down the pipeline as a forced change in the market, or maybe banks take some of these properties back and sell them. But I don't think it's going to be through changes in office and retail. The only thing that would change there is if the banks that lend to you, David, on the property you have also have loans in office and retail, and the portfolio is distressed elsewhere, and they decide to put pressure on you because your portfolio is distressed. Their portfolio is distressed in other assets that they have. So that's the long and short of on how I think it'll affect multifamily. Indirectly, I'm sure, but the bottom line, guys, is if you want to get involved in office, retail, in multifamily as well, you could wait until a real estate broker puts these properties on the market. You could do some direct to seller stuff, as perhaps our guests are going to talk to us about, or you could go and talk to banks. And I think that for office and retail specifically, and perhaps multifamily, the bank is the one that's going to be the one that's going to be dictating who buys the property, when it gets sold, why it gets sold, and to whom. You guys that want to engage in these properties and catch them before they go on the market are going to likely do really well if you go and build relationships with your local bank and say, what distressed assets do you have on your balance sheet? The loss and mitigation department. I want to talk to the loss and mitigation department about the bad assets you guys have and to see how I can help you. Right? I don't think the dominoes have really begun to fall yet, but those that are going to be successful are beginning to build those inroads in conversations with their lenders today. So those are my two thoughts on office, guys. Guys, we're going to see more of people selling properties that they just couldn't quite get done, couldn't get across the goal line. And if you've got the chops for financing, you can raise the capital and you can jump in and be Johnny on the spot on those deals. It's not going to be just shooting fish in a barrel. It's going to be a lot of work. You're going to have to pick up the work that the prior owner wasn't able to do. Nobody's going to sell their cash cow at a distress, right? You're going to be buying these properties. They're going to be completely mismanaged, beat up, under construction funded, and you're going to have to dump more construction into them, manage them properly to bring them to the promised land. But if you're equipped to do that, right, better manage these properties, you could really do really well in the changing economy we have in front of us. So that's what I got for today with my comment on current events. If you guys want to drop a current event that you want me to talk about, always go to our DeRosa Insiders page on Facebook and write a comment and just say, hey, Matt, could you please talk about this on the Cashflow Digest show? And I will gladly do that. And I'm really, really thankful for you guys and all the DeRosa Insiders community and for those of you guys watching online. Thank you, guys. I'll see you next time. And thanks for watching the Cashflow Digest. Hey guys, Matt Faircloth here. Thank you for listening again to the Cashflow Digest. I really appreciate you guys doing that. If you guys want to hear more about what DeRosa Group has to offer, go to DeRosa Group, DeRosa Group.com, DeRosaGroup.com online. You can hear about all the great things that we offer from an educational standpoint and passive investment standpoint on our website. See you there. And if you guys want to join our online community, DeRosa Insiders on Facebook, where you can watch this program get recorded every Friday at noon Eastern, and you can come on as even a guest or ask questions on the show. We hope to see you guys on our online community, DeRosa Insiders. See you there.